Hello and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day, and before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And this episode is brought to you by moneymetals.com, the most trusted online bullion dealer and depository in the United States. Use Money Metals for purchasing, selling, or storing physical gold and silver. Hit the link in the description below to learn more and use coupon code JesseDay to get a $10 discount on your first purchase. And today's guest is the author of the John Rubino Substack, where he writes about how to survive and thrive in the coming crisis. We're going to try to answer the question, is 2024 the year we could see gold in some way or another return to the monetary system? John Rubino, it's great to have you back on the show.
Hey, Jesse, great to talk to you again.
Well, let's start with the fact that several U.S. states are now introducing legislature to reinstitute gold and silver as money. I want to read a quote from Tom Luongo's Gold, Goats, and Guns blog, where he said 20 states in the U.S. are organizing and introducing their versions of the Sound Money Act, making gold and silver transactional currencies. New Hampshire is first this week to present it to the legislature. So how significant is this development? And how significant is it towards potentially having gold and silver be used as a transactional currency in those states in the U.S.?
Well, it's a step in that direction. These aren't huge steps, but I think they illustrate the fact that people around the world can read charts. You know, they see, for instance, U.S. government debt going parabolic. And when you see debt charts start to go straight up, you start to look for alternatives because you assume the current system is failing. And that's what's happening now. So in US states, it's now, not just smart policy, but good politics to bring laws like you're talking about to a vote. And some of them are going to pass and it'll start to happen. But basically what states are looking at doing is three things. First of all, they're looking at making gold and silver kind of sort of legal tender where you can pay your taxes with them. And that's a vote of confidence for gold and silver, although I'm not sure how many people would actually use gold and silver to pay their taxes when they have dollars sitting around. You have to choose which one you want to keep and which one you want to spend. And usually it's going to be the fiat currency. They're also, and I think this is maybe a bigger deal, they're taking the sales tax off of purchases of gold and silver, which means that the transaction becomes, instead of a purchase of a commodity, it becomes an exchange of currencies. You're exchanging your dollars for gold and in a kind of a foreign exchange transaction. So that's sending the signal that we view gold and silver as money. And it sets the stage for doing more in the future. And the third thing is some states are setting up gold depositories, where like in Texas, for instance, they've got a state-run precious metals depository where, say you're a stacker, but you've pretty much got all the Krugrands and Gold Eagles at home that you want to keep there, and what do? You can stop accumulating, or you can find a good, safe place that's, not as safe as at home, not is under your control at home, but still pretty good. And a state depository fills that bill. So that allows you to keep buying precious metals and then just have them shipped to your account at the Texas State Depository or wherever. And some other state just did this too. So it's a small but growing trend right now. You put all that together and you get a nice environment for gold. In other words, it's officially sanctioned now, which brings it to the attention of people who weren't, people like you and me who obsess over gold and monetary affairs and stuff like that all day long. Regular people see this and think, oh, the government approves of gold. Well, what is that? Let me look into it. So it's a start. It's taking us in the right direction, albeit very slowly, but still, steps in the right direction are better than no steps in the right direction.
Absolutely. I had Alistair McLeod on the show recently, and he pointed out that he suspects both Russia and China are slowly moving towards going on to a gold standard. So obviously, if those nations could pull that off, it would be a massive geopolitical win for them and potentially a blow to the US dollar. Do you see those nations attempting to reintroduce gold as money at some point? And could they actually pull it off in practice?
Well, they're taking steps in that direction. Again, steps, not strides, but steps. Where right now China and Russia are accumulating a lot of gold. Central banks in general are net buyers of gold right now. And I think in the last 2 years, they've taken about 1,000 tons per year, which is a huge number in the gold market. And that gold serves a lot of purposes for a country like China or Russia. One is that it's a good investment in a world of fiat currencies. The gold that they buy now is going to be worth a lot more in terms of dollars and euros and yen in the future. So as far, if they're just doing it for that reason, it's a smart thing to do. But it also gives them the flexibility to back their currencies with real money at some point in the future. Now, that's not an easy thing to do, though. So we shouldn't expect that just to happen. Some Monday morning, all of a sudden, there's this big, giant gold-backed currency out there. Because if you're the first one to do that in a world of fiat currencies, and people decide that you're serious about it, the value of your currency goes up relative to the fiat currencies out there. And that makes, your citizens who own gold richer, but it also makes your exports much more expensive because they start out priced in your appreciating currency. And that can destroy your export sector. So it's not the kind of thing that you want to do lightly because it could get you assassinated. When you start messing with the multinationals that run big parts of your country, you're taking a big chance. Actually, it's interesting. Switzerland had a problem like this a few years ago because Switzerland is basically not really a country. It's a banking sector with geographic borders, and because of that, a lot of money flows into the banks there. That makes the Swiss franc a relatively sound currency, which makes it go up when the fiat currencies otherwise are being inflated away. And so they faced a situation where the Swiss franc was going up relative to the euro in a way that was debilitating for their export industries. And so they had to back off and they had to peg the Swiss franc to the euro, which means they accept Eurozone level inflation in order to protect their export industry. So, that's kind of how it works if you try to go solo to a gold backed currency. But one way it might happen that is not destructive would be what Putin has been talking about for Russia and the BRICS countries, is where they devise a currency that is just for trading within the BRICS bloc. So it allows them, they can back it with gold, so they all know what it's worth. It's worth a certain weight of gold. It's not worth anything, who cares what it's worth in dollars or whatever, but they know exactly what that currency is worth. They all buy some and they use it to trade with each other in a very monetarily stable way. Now, that's got some potential, The downside of that is that the BRICS countries are mostly dictatorships who don't trust each other for good reason. And so, you kind of have to trust each other to have a common currency. So I don't think they're there yet, but I think it's becoming one of those situations where the enemy of my enemy is my friend. And they're so traumatized by what the US is doing around the world that maybe they're going to be more willing to be trusting of each other than they would be otherwise. So the US could be, in other words, the US could be driving the BRICS bloc to a gold-backed currency. So I think that's a complete possibility in the next few years, as long as we understand the technical hurdles that it would involve. Wouldn't be easy to do. It could be incredibly messy and it might not work at all, but it's something they might try just because the alternative, which is to continue to use dollars for their trade, is so unpalatable right now.
Right. And you mentioned issues with exports. You mentioned issues with these countries being dictatorships and can they really trust each other? What are some of the other challenges you could see if a nation was to attempt to go onto a gold standard? What else comes to mind?
Well, you to go on a gold standard, let's say the US did it and say this coming Sunday night, they announced, okay, Monday morning, we're on the gold standard and the dollar is now just a name for 1/10,000th of an ounce of gold. What that means is that everybody that trusted our government and held a lot of dollars is instantly impoverished because that's basically a massive devaluation of the dollar, which is the only thing you can do if you're going on the gold standard. You can't go on the gold standard with your currency at its current value because it's wildly overvalued relative to what's happening to it. In other words, you're inflating it away really aggressively. So you can't freeze things at today's price. You have to jump to a much lower price, get that devaluation out of the way. But, you could have 50 million people in the streets who saw their bank accounts and their bond funds basically just melt away if you tried that. So the only time anybody is going to do something like that, in other words, Jim Rickards' currency reset, and only when that's going to happen is when the alternatives are even worse. And we're headed that way fast. So this isn't a statement about the impossibility of going to a gold standard. It's a statement about how things have to get much worse before that becomes palatable. But you know what? A couple more years, about like 2022, where you have double-digit inflation officially, and much greater inflation than that in reality. Which that'll freak people out to the point where they're already in the streets. They're already panic buying stuff at Costco and Walmart, which is making the price of those things go up and the availability just evaporate. And the government might say, all right, look, we're in trouble either way. So why don't we do the right thing and just take the pain? And then we'll go down in history as statesmen instead of Herbert Hoover, and let's try it. So that will be how it happens. And I would say that we're years instead of decades away from something like that. So it's not something that we won't live to see, or somebody like me who's a baby boomer won't live to see. But it's not an immediate thing, but it could happen in the not too distant future.
And you mentioned technical hurdles involved with going on a gold standard when you were talking about BRICS. So I'm wondering how it could be executed in the modern era. Would it require using blockchain technology to account for all of the precious metals? Would that be the most reasonable solution? I know Peter Schiff has floated the idea that that's how he thinks a gold standard will come back. Is there another way to implement it? How do you see that working out?
Well, I'm not a blockchain expert, but what I know about blockchains makes it sound like a match made in heaven. You have gold in a vault that is your base money. And then the exchange part of the process happens instantaneously and virtually with a blockchain that can't be hacked, that's immutable, that lets everybody know exactly what they've got in real time, 24/7. And, I love the idea of that. And I don't have the slightest idea what the technical hurdles would be to implement it. But, if the Bitcoin maximalists are right about the ability of a blockchain to manage exchanges and value tracking in real time without being hacked, then yeah, it makes a lot of sense to give it a try. Um, on the flip side is that it's brand new, and if we're going to go back to a gold standard, one of the appeals of a gold standard is that it's understandable because we did it for 200 years. We know exactly conceptually how it works. And if we're going to add some newfangled piece of technology to that process when we're under the stress of, inflation riots and financial collapse and things like that, that might make it a hard sell to the 67-year-old guys who don't have any Bitcoin, but who are making financial policy for the countries of the world. So that we'll have to see. If they're going to take a big leap of faith, maybe they'll just go whole hog and include the blockchain in their new monetary system. But again, I don't know. A lot of pressures or a lot of decisions are going to be made under pressure by people who were wrong for their entire lives in retrospect about monetary policy. So the idea that they get it perfectly right with their first iteration is asking too much, I think. They'll try something, but we may have to go through a few different iterations before we actually get it right.
And how would the global economy change if, going back to your previous example of the BRICS nations, creating a gold-backed currency which they use to transact with each other for commodities and for other goods in terms of international trade. How could that affect the price of those commodities on the global market, and any other impacts that that sort of system could have on the global economy and financial markets?
See, ideally, I mean, if it's actual neutral money, neutral sound money, it shouldn't affect the real prices of anything. You know, everything should just trade in relation to its utility and supply and therefore demand to the rest of the world. You know, it should be a really clean system where there's not a lot of monetary noise introduced into the production and consumption process. So, uh, you know, I don't know other than that. I would say that if a BRICS gold-backed currency is introduced and it works, and those are big ifs, you know, but if it does, that introduces legit competition to the dollar and the euro, and it also holds up, you know, kind of a mirror to those currencies. We see what could be. You know, we see how a real sound money currency works, and we lose more respect than we've already lost for these idiotic fiat currencies that are just based on whatever the chairman of some central bank somewhere says it's worth, you know, because the concept of fiat currencies is fatally flawed. And all the stuff we've talked about so far is kind of an offshoot of the fact that people are coming to agree with the fact that our current monetary system doesn't work. So at some point, fiat currencies lose all credibility and the whole concept is discredited. Now, it's going to happen regardless, but a BRICS gold-backed currency that actually works would be a big step in that direction because it would show us how things could be. And we wouldn't, you know, then the argument would be, why don't we have something that's as good as these, you know, these third world dictatorships over here? And the argument is going to be, I mean, it's going to be a tough argument to make if you want to keep fiat currencies when there's a viable alternative out there that's vastly better. So again, that's out there somewhere, very possibly, you know, lots of hurdles on the way, but it's something that could happen. And if it happens, it'll be a big deal.
Well, getting a little bit out onto the fringes even further of the gold and silver bug philosophy, I've spoken with David Morgan before about a trimetallic system where copper, silver, and gold are all used as money, as transactional currencies. So I want to get your thoughts there. Have you given much thought to that sort of system? Have you come across anything about that in terms of your research? And do you think that could be a feasible system?
I don't think it would be necessary if you have a gold standard based on the blockchain, because you can divide gold into infinitely smaller parts to make small change in a blockchain scenario, right? Well, at least in theory. I don't want to say anything that's you know, with absolute certainty when it comes to blockchains, because as I said, I'm not an expert on that subject, but it seems like you could do that. And so if you could have fractions of gold grams trading electronically instantaneously around the world, all based on, you know, a completely agreed upon price for gold, then you don't really need to complicate it with other metals. I think there's a decent chance. Oh, and the other thing is we're already facing massive shortages industrially of silver and copper. So introducing them as money might be one of those things where we, you know, kind of cut our nose off and to spite our face, because that would make the transition to electrification much harder, because we're artificially raising the price and lowering the supply of these industrial metals that we really need. So I think silver still has a monetary role, but maybe it's during the crisis when we're in between the failure of fiat currencies and the rise of new gold-backed currencies or commodity-based currencies in some other way, you know. But let's use gold as our example here. And you know, the time might come when you go to the farmer's market and you hand them a silver maple leaf or something like that, and they basically give you a week's worth of fruits and veggies. Okay, and they're happy to do it because you're giving them real money. And we could have a period where things are so messy that the silver and gold that we've stacked actually become tradable money for a while. It's physically inconvenient to do that long term, so we're going to have an electronic successor to that when it happens. But I think that one of the reasons we should be stacking so aggressively right now is that there could come a time when dollars, for instance, when the government makes cash illegal, tries to herd us into a central bank digital currency system, which they then can use to track every movement and every purchase that we make. And the people who value their personal freedom and their privacy don't want any part of that. Then we're going to be trading with gold and silver, and I think silver coins are going to be the best thing to have for however long that period lasts. And they'll still be valuable regardless. If the period, if we have that kind of a period and it ends 1 year later because there's a rebellion against CBDCs, and then the peasants take their pitchforks to the castle and demand a gold standard or something like that. If it's only a year, silver in particular still gets more valuable because of its industrial uses and because it's a good backup in case the current financial system fails. So we're always going to want to own silver. It's probably always going to be a really good investment. So just because we don't go to a trimetallic system, it doesn't mean you shouldn't own silver. It's got multiple values going forward, and it should be one of the things that we are, as aggressively as we can be, adding to our portfolios.
And if gold was to make a return as sound money, whether that's through a blockchain technology or some other way, how would that impact the gold mining sector?
I think it would be a really good thing for the gold miners because a lot of their costs are embedded in fiat currencies that are going to be dramatically devalued. So a lot of their debt, for instance, if they've got $1 billion of debt at 3% or 5% or whatever, and the dollar is devalued, that helps the miners a lot because it's easier to pay back that in that devalued currency. Now, there's all kinds of reasons why that might not happen because governments might step in and change contracts to adjust for the massive devaluation they just perpetrated on their currency. That could happen too. But I think in general, going back to a gold standard would be great for the gold miners, probably really good for the silver miners, and operationally fine for the other miners. They'd just be henceforth operating in a sound money system, which I think they would all approve of ideologically, and they'd find a way to make it work operationally. So, generally speaking, good for the miners.
Well, let's talk about the value you're currently seeing in the gold and silver mining space, as I know you're bullish on the sector overall. Which areas are you currently either invested in, looking for opportunity in, watching for a potential entry point? Do you mostly look at explorers, developers, producers, the royalty companies, a mix of all of them? How do you approach that game?
Well, I've got a portfolio in my Substack newsletter where the deal is that everything I recommend, I have to buy myself. So we're all in it together. We own the same things. And it's got almost all the royalty companies because that's such a great business model in precious metals. It's much less risky than actually mining. And it's much better diversified than any miner can be. A royalty company might have 200 royalty streams, whereas even Newmont or Agnico Eagle has, a dozen or so operating mines. You're much less exposed to political risks. So I've got the royalty companies in there, and then a few junior producers and a fairly large number of explorers, just because they're lottery tickets. I don't know if you remember Great Bear Resources from a couple of years ago, but in the time I was watching it, went from 39 cents to $24. And so if you got in early with something like that, you can have a whole bunch of losers alongside Great Bear and still make a ton of money. And there are a lot of explorers out there who are generating Great Bear level drill results. And this market is not at all impressed with junior miners and exploration companies. So they're not really getting the credit that they deserve for some of the results they're generating. And I think that creates a value mismatch. So the highest quality explorers, like I said, lottery tickets, most of them will never succeed. Even the ones that look good now, they're going to have something happen that makes them go to zero, some of them. But the ones that succeed will succeed in a very big way. So I'm a little worried about the large producers. I think they'll still do great when gold goes to 2,500 or $3,000 an ounce. But political risk has become such a big deal lately. Where you saw the Cobre Panama thing that just happened, where one of the biggest copper miners in the world was just closed down by Panama. And I think First Quantum is the name of the company that runs that mine. That was an existential threat for them. And it did hurt Franco-Nevada, one of the big royalty companies, but not nearly as badly as it hurt the company that was actually running that mine. And there's all kinds of things going on in the world that are similar to that, where governments decide they want a bigger cut from their miners, or somebody comes to power who's very green and wants to close down mining in general. That's out there and very unpredictable, as the Cobre Panama thing illustrates. So the big miners have political risk that it's very hard to invest for or diversify for or anything. I think, like I said, I think they'll still do well on balance, but that with that big risk out there hanging over them, it kind of spooks me a little bit. Now the miners who have done best in the last year have been the uranium guys. That's been a phenomenal year, and the the reason for that is. And by the way, the uraniums are saving my Substack portfolio, because otherwise it would just be a bunch of losers. But the reason uranium has all of a sudden done so well is that over the past decade or so, a lot of countries decided they wanted to get away from nuclear. That was part of the non-green transition. And so they did it. They closed down a lot of nuclear plants. They mothballed a lot of operating plants, and took a lot that was in the pipeline out of the pipeline. And that turned out to be a huge mistake. So a lot of countries now are going back to nuclear in a big way. China has this massive nuclear plant pipeline. Japan has a big one. Korea has a big one. The U.S. is finally getting back into it. So if you look at all the new nuke plants that are coming online, and then compare what they're going to need to fuel themselves with the amount of uranium that's coming out of the ground, there's a big imbalance there. There has to be more uranium found and mined somehow, and that's going to take higher prices to incent miners to go out and do that. So the uranium miners right now, the ones who have viable resources that they can mine today, are just crushing it. And there could be a correction here pretty soon, because when a whole sector almost doubles, when some of the big players more than double, you create a lot of embedded profits for people to take. So just because uranium is a great sector doesn't mean they can't go down by 30% on average or something like that in the short run. But in the long run, they're probably still, potentially triples, even the good ones in the sector that have already been discovered and understood. So uranium is something everybody, in my opinion, should be owning to an extent. And the only question is the timing of how to get in right now. And I would be, I guess, cautious. You could dollar cost average into some of the good names in the space and be okay a few years from now.
Yeah, I wanted to follow up on uranium. My portfolio is about 40% uranium stocks, and obviously performed very well because of that last year. I'm also a bit more conservative in that I mostly stick to the ETFs and some of the larger developers that I see a clear path to production. Some of them going into production quite recently, Energy Fuels being one of them. Now, I look at all the exuberance at present in the uranium space, and it feels to me like some degree of caution should be warranted. I'm certainly not allocating capital. I tend to hold back and try to deploy my capital when I see somewhat of a correction in some of the equities that I've been watching, or that I want to add to positions. Do you think caution is warranted here, for those maybe new to the space, or for those looking at uranium for the first time? Do you think we could be due for a pullback here, But obviously, I like your philosophy of dollar cost averaging as well, because for your average investor, that's probably the best way to go. Do you think, in that sense, this bull market is just getting started?
As Rick Rule likes to say, the easy money has already been made. In other words, when a sector goes from hated to not hated, that's the easy money because they're super undervalued when they're hated, and they go up to just more or less fairly valued based on current operating, et cetera, et cetera. You get a doubling in that period of time, and they're still reasonably valued. They're still good investments, but the easy money is over. So I think the uranium sector is going to see basically just good news operationally for the next decade. So there's going to be this drumbeat of good news that is going to keep the stocks from going down hard. But on the other hand, you've got a lot of people with stocks that have doubled, right? And the basic strategy that everybody talks about for stocks that have doubled is you take your original investment off the table and then you play with house money going forward. So right now there's billions of dollars out there that could be taken off the table by people who want to then play with house money. That'll knock the stock price down a little bit. I'm not saying that's going to happen. I'm saying that's a potential issue if you're starting to get in now. And dollar cost averaging works in that kind of an environment because when it goes down, you're putting the same money in each month, you buy more shares. And eventually you end up with a good average price, So you don't have to be in or out, black and white, with a sector like this at this point in its cycle. You can be just kind of feathering your way in, hoping for a correction, because then you get a chance to load up like you should have before the last run started. And your losses aren't outrageous, and it's balanced psychologically by the fact that you're happy to be buying more. So that's a healthy way to get into an industry where you don't put yourself in a position where some horrible thing might happen and to cause you to question your judgment or anything. And you mentioned the ETFs in this space. There's one sector of ETFs that I think is really interesting lately, based on how they've done lately, and that is the physical commodity ETFs. Because if we're talking about political risk, or we're talking about operational risk, or what inflation does to operating costs, things like that. If you've got an ETF that just goes out and buys a bunch of uranium, let's say, and then puts it in a vault or whatever structure you put your uranium in, I don't know how that works, but you do that, you take it off the market. So that makes the price go up a little bit, other things being equal. That makes your shares as the ETF go up a little bit. You can then issue higher price shares, buy some more uranium, take it off the market, and you have kind of a self-perpetuating thing going on there, perpetual motion machine. And I'm not sure that's really ethical, but these things exist, and they seem to have a really nice business model because they eliminate a lot of the risks in the mining sector, and which are growing now. The mining sector is terrifying in a lot of ways, and these physical ETFs don't have any of that. They just go out and buy some. And there should be one for copper, but I guess there's storage issues. But there's silver, there's gold, there's uranium, and they have all done very well. Relative to the price of the underlying metal. The Sprott physical uranium ETF, I think, is my best performer on my Substack portfolio. It's done better than Cameco even, and so and it's the least risky thing to own. So I think that's a really good thing to look at when you're looking at commodities, especially for the first time. You can just buy those physical commodity funds, and then you've got exposure to the sectors, and then from there you start looking at other things you want to buy and kind of build your portfolio out into something that's more diversified. But I think the physical ETFs ought to be the bedrock of your portfolio.
And you mentioned that uranium kind of saved your portfolio in 2023. Obviously, the gold and silver mining stocks, especially the juniors, are not doing well, especially when we compare it to the price of the metal itself, when we're talking about gold in particular. How do you approach that? Do you buy on dips in that sense? I mean, when does it become a situation when you're catching a falling knife? Because you did mention, of course, the explorers, you keep kind of a basket of them in case one goes to the moon, the other ones can fail. How do you look at distributing more capital when the whole sector is correcting? Do you exercise caution? Do you stick to dollar cost averaging? Or for those companies that you have a lot of conviction in and have done the due diligence, do you allocate more capital on those corrections?
Well, see, here's the tricky part with that stage of a cycle. If a group of stocks are already undervalued relative to their intrinsic value, which would be, where is Newmont going to buy them out when Newmont finally figures out what they've got in the ground? Then it's hard to know where the bottom is, because if they can get below intrinsic value, why can't they go down 50% more, and be more undervalued? So that's very tricky. And, all I can say is that when something is undervalued, um, it becomes attractive, and then it's a question of how attractive and how aggressively you want to buy it. But I think dollar cost averaging works for these little stocks too, for the same reason, because we can't predict where their bottom is, but we can kind of sort of predict where, if everything goes right, where their top is. So if you're way closer to zero than you are to where that theoretical top value is, then you can feather in. If Newfound Gold or Snowline Gold are reporting just phenomenal drill results, and the maiden resource that is likely to be derived from the drill results as you currently see them is big and probably very valuable. And that makes it likely that some, big miner that is depleting its resources and has to renew them somehow and is going to go out and buy some little guys in order to do that, that what they might pay. So, if that's what you're seeing, and that is what we're seeing with a lot of these exploration companies, then buy a little bit. Don't go crazy, because they can, no matter how good they look today, they can still go to zero. So don't go crazy, but buy, and don't focus on just one. Okay, make sure you diversify into like 10 of these things once you start. And even if you just buy a few shares of each, you can do that now with a lot of brokerage houses, or you don't have to limit yourself to 100 shares. So buy a few shares, and that, because you have some skin in the game, then that makes it interesting. So you're more likely to pay attention to the drill results and figure out what they mean exactly, and you educate yourself about the sector and about the business in the process. And as time goes on, you get more and more confident about what you think you understand about these companies, and you get better and better able to value them. And then you're better able to allocate your capital to overweight the very best ones and underweight the weaker ones. So it's an education process. And having some skin in the game is what incents you to teach yourself how this sector works. So that's what I've been doing I've been doing it for years now, so I should know what I need to know. But that's how it's worked for me with exploration companies and junior miners in general. You got to learn what these geological terms mean, and how to extrapolate from one set of drill results to a maiden resource and stuff like that. It's a learning curve, but it's also fascinating. It's an interesting business, and it's a very high stakes business. So it's exciting because, you see what's happening there, and you know that this could be a 10 bagger. You could be watching the birth of something that's worth 1,000% more than today's price, and it's possible because you've seen it happen over and over again in this space. So it's very exciting if you can handle, the kind of volatility that comes with something like that. There's never a dull moment in the junior mining space. So, it's fun, and it's potentially big money.
Yes, absolutely. Never a dull moment. And this has been a great conversation, John. I've learned a ton, both on the potential return of gold as sound money, as well as evaluating mining stocks. I'm happy we're able to slip uranium in there as well, my favorite commodity. So that's great. Before I let you go, for those who want to hear more from you, dive deeper into your methodology, and learn about your stock picks, where can they find your Substack, and what is that all about?
Well, I'm at rubino.substack.com, and the idea is that we've got some extremely volatile times coming, and how do we prepare for them? What's the best thing we can do? Not just with investing, but with our lives. Um, so it's been a fun year. It's just 1 year old, this newsletter, and it's going to change in the year ahead because I spent the first year explaining terms, doing introductory articles and things like that, and first passes on a lot of the stocks that are in the portfolio. So the next year will be updates on the companies that are in the portfolio, and version 2 and version 3 of different kinds of prepping subjects and things like that. So it'll be different from the first year. So it might make sense. You can get a monthly subscription for $5, and you can get most of what I put out for free. Just the actionable stuff is behind the paywall, but it might make sense now for new people coming to the newsletter to get a $5 a month subscription, which can be canceled anytime, and use that subscription to go back through the archives, read the introductory stuff, get current with where the newsletter is going, and then go on to the updates and things like that. So anyhow, rubino.substack.com, and it's so far a fun community to be part of.
Great. I'll put a link to that in the description below for people who want to check it out. Thanks once again, John, for coming on and sharing your knowledge with the audience.
Thanks, Jesse. Always great talking to you.
And thank you for joining us today. As a reminder, this episode is sponsored by moneymetals.com. Use coupon code JesseDay to get a $10 discount on your first purchase. Link is in the description below, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.